Welcome back to the Insider Signal. This is the show where we follow the money because, let's be honest, that's where the real story is.
It's not about fairness, it's about information. And today, we're looking at a piece of information so loud, it's basically shouting.
It really is. We're talking about an earthquake of a transaction, a signal that points to a huge shift in the future of one of the biggest software companies on the planet.
Salesforce. CRM.
Exactly. And this isn't just a big trade. This is a high-conviction, perfectly timed re-entry by an activist investor whose playbook in the tech world is, well, it's legendary.
It's $25 million of institutional cash deployed into Salesforce just days after their last earnings report. And the source is ValueAct Capital, run by co-CEO Mason Morfit.
That's the name you need to remember. For anyone out there tracking the 13 Fs, trying to see what the big players are actually doing with their money, this one is impossible to ignore.
Well, and insider buying at CRM is, historically, almost non-existent.
So a buy of this size from this particular insider is what we call a high signal event. Our mission today is simple. We're going to accept the reality that the market has priced Salesforce for slow 9% growth.
While Mason Morfit just put $25 million of his fund's capital behind a 330% growth story.
So we've been getting into the weeds with the SEC filings, the corporate news, and really dissecting ValueAct's playbook.
Right. We want to understand the thesis that drives a guy like Morfit to buy back into a stock, 24% below where he just sold it?
It's a masterclass. We're going to break down the dollar amounts, the AI catalyst they call Agentforce, and connect this move directly to what they pulled off at Microsoft.
When an operator with Morfit's track record puts that kind of capital on the line, you just know the timing is surgical. Let's get into it.
Okay, so let's unpack the man making this monumental bet, Mason Morfit. In our world, the activist world, you have the guys who scream and shout, and then you have the surgeons.
And ValueAct is absolutely in that second category. Morfit is the definition of institutional pedigree. He's the co-CEO and chief investment officer of ValueAct Capital.
That's the San Francisco firm managing around, $10 billion in AUM these days?
About that, yeah, as of 2024. And they're disciplined. They take big, concentrated positions in a handful of companies where they see a path for real structural change.
He's a veteran, too, not some hotshot newcomer. He's been through multiple cycles.
Oh, absolutely. He joined ValueAct way back in 2001. So he's seen the entire life cycle of these huge enterprise tech companies, the explosive growth, the messy middle, the restructuring. He knows the game.
And his background is interesting. Princeton, political economy. It's not the typical finance bro path.
No, and that informs his whole approach. He thinks about deep structural organizational change. It's perfect for the kind of activism they do.
He also navigated that tricky leadership transition, taking over from the founder Jeff Ubben as CEO in 2020. Now he's co-CEO with Rob Hale. This is an established operator.
Which brings us to their playbook. Their whole style, you could call it quiet activism. It's one of my favorites, actually.
And mine too. No loud proxy fights, no drama on TV.
Exactly. They don't want the spectacle. They prefer to buy a big stake, get a board seat, and then work collaboratively with management behind closed doors. They want to be a partner, not an enemy.
And the proof is in the pudding. 56 public company boards in 23 years? That's insane.
And we're talking about heavy hitters. Microsoft, CR Bard, even Valiant Pharmaceuticals during that very tricky period. He gets inside and helps steer the ship.
Which is precisely how he landed on the Salesforce board.
Right. He joined in March 2023. And you have to remember what was happening then. Mark Benioff, the CEO, was under siege.
It was a full-on activist swarm. You had Elliott Management, Starboard Value, Third Point, all of them circling.
They were all demanding better margins, more efficiency. It felt like Salesforce was at a real crossroads. Benioff needed an ally who actually understood the business, not just an activist looking for a quick buck.
He needed a surgeon, not a butcher.
He needed ValueAct. And Morfit came in, provided that constructive voice. He backed Benioff's vision, but with, let's say, some new guardrails. And he was immediately given some very powerful roles.
He chairs the compensation committee.
And serves on the business transformation committee. Think about that.
Yeah.
He's not just observing. He is actively making sure executive pay is tied directly to ValueAct's goals.
Which are?
Ruthless efficiency and nailing this AI transition. That's the entire game right now.
Okay, so Morfit is betting $25 million on the execution. But execution of what exactly? Let's talk about the platform he's backing. Salesforce is not your dad's CRM anymore.
Not even PaaS. It's this vast ecosystem and this new layer of autonomous AI, what they're calling Agentforce. That's the core of this whole thesis.
You really have to appreciate the scale of what they're trying to do. They are weaving these autonomous agents into every single part of their customer 360 platform.
It's not an add-on. It's becoming the fundamental infrastructure. It's changing how the whole thing works from the ground up.
And you see it across the product line. In Sales Cloud, you have sales agents, sales AI, basically automating lead qualification, pipeline management.
Then in Service Cloud, the goal is just massive cost reduction.
Yeah.
AI agents handling everything from basic customer service tickets to complex IT service issues.
And it goes right through the funnel. Marketing Cloud using AI for hyper-personalization, Commerce Cloud using AI to unify the online and in-store experience.
And it's all unified under this one banner, the Agentforce 360 platform.
So we need to define this for people because autonomous agent is where the whole valuation argument lives. It sounds like science fiction. What is it practically?
Salesforce calls it always-on digital labor, augmenting every employee, department, and business process. And the key is moving beyond the co-pilot phase.
Right. We've heard about copilots for years now. They help a human. They draft your email, summarize a call.
Exactly, an assistant. An autonomous agent, which is what Agentforce is, performs complex workflows independently.
So it's digital labor that you can just set loose on a task, and it does it without you.
Precisely. And this is what Benioff is calling the third wave of AI. They are laser-focused on building agents that are highly accurate, deterministic, with very low hallucination rates.
Because if you can't trust it, you can't use it.
Of course not. But if you can trust it, if you can confidently hand off entire business processes, like resolving a complex billing issue or generating a personalized sales quote, the productivity gains and the labor savings become exponential.
And that's the engine. That's what justifies that $60 billion revenue target and the much, much higher multiples that Morfit is betting on.
It's a huge bet, a bet that the platform leader can successfully pivot to this new autonomous paradigm.
Okay, let's get to the quantitative proof, the hard numbers that show us Morfit's conviction. This trade is really a case study in how to spot a genuine insider signal.
It is. The SEC filing is crystal clear. On December 5th, 2025, Morfit purchased a block of 96,000 CRM shares.
96,000? And what was the price?
The average price paid was $260.58 per share.
So you multiply that out, and we're talking about, what, just about $25 million?
Approximately $25 million. And that's not a rounding error. That is a fund manager planting a flag and saying the market is wrong and I'm putting serious money on it.
The size is everything here. This is the second largest insider purchase at Salesforce in the last 18 months.
This is why we track these signals. A trade of this magnitude by a director who represents a sophisticated activist firm, it's never an accident. It's a statement.
And for anyone tracking the nitty-gritty, these shares are held indirectly through ValueAct's funds. Specifically, the ValueAct Capital Master Fund. This is institutional capital, not his personal account.
Affirming a fund-level thesis. But we have to put this trade into context because it's a buy against a tidal wave of selling.
An overwhelming tide. The rarity of anyone buying CRM on the open market is what makes this so powerful.
The numbers are just staggering. Over the last 18 months, insiders at Salesforce have sold $1.31 billion worth of stock.
A billion with a B. And in that same period, how much have they bought?
Only about $100 million, and most of that is Morfit. It's a 13-to-1 ratio of selling to buying.
So if you took ValueAct out of the equation, the insider signal would look horrifically bearish.
It would. It shows you the depth of their conviction. They are the lone bull in a herd of bears, at least among the insiders.
Which brings us to the elephant in the room, Mark Benioff, the founder, the CEO.
Right. He still owns over $5 billion in stock, but since 2021, he has executed 671 consecutive sell transactions.
671 sells and 0 buys.
Which sounds alarming, and we have to be nuanced here. For a founder with that kind of legacy stake, this is often just normal financial planning.
Diversification, taxes, philanthropy, we see it all the time with founders. They're cashing out a lifetime of work.
Right. Benioff's selling is, for the most part, just operational noise. Morfit's $25 million buy is pure calculated conviction. It's 25 to 50 times bigger than a typical insider buy. It cuts right through that noise.
And it signals a very disciplined tactical reentry. It's not just random accumulation. His pattern here is really telling.
His timing has been impeccable. Let's rewind to June 2024. Salesforce had just delivered its first revenue miss since 2006. The market was panicking.
And what did Morfit do?
He stepped in and bought 428,000 shares for just under $100 million. At an average price of $233, he bought the absolute bottom of the sentiment.
And that preceded what, a nearly 50% rally?
A 48% rally, all the way to $346. Then, fast forward to December 2024, the stock is flying high, near 365. And he sells.
A massive sale, over 1 million shares.
At an average price of about 342, locking in hundreds of millions in profit for his fund.
So he sells at 342, and now he's buying back in at 260. That's about a 24% discount from his own exit price.
Exactly. He's signaling that the sell-off that happened after his sale, even with the strong Q3 numbers, created a new entry point, one that meets ValueAct's very strict risk-reward criteria. He's buying his conviction back cheaper.
And the scale of their commitment now is huge. This latest buy brings their total holding to almost 3 million shares.
Just shy. 2,994,509 shares to be exact, worth about $780 million at today's price.
Which, as a percentage of their fund, is what?
It's a massive concentration. Salesforce is their second largest holding. It represents about 22% of their entire $5.9 billion 13F portfolio.
22% in one stock.
When a firm like ValueAct puts 22% of its capital into one name, they are saying the risk of more downside is tiny compared to the potential for a massive multi-year upside.
Okay, so we've got the who and the how much. Let's get to the why. Morfit pulls the trigger 2 days after the Q3 earnings report. That report had to have the proof.
That's the whole thing. The report was the catalyst. It proved that the AI thesis had moved from a PowerPoint slide to a real, measurable, revenue-generating business.
From slideware to software?
Exactly. It moved across the chasm. And the market's weird reaction to that strong report is what created the price disconnect that Morfit just jumped on.
We need the specifics. What were the tangible Agentforce numbers that convinced a guy like him to deploy another $25 million?
The numbers for Agentforce were, frankly, explosive. The platform officially launched in October 2024, and the adoption curve is what blew people away. First, they hit 9,500 paid deals.
9,500, and that's up from what, the prior quarter?
Up from 6,000. So that's a 50% quarter-over-quarter jump in paid customers. That is insane initial traction.
Adoption is nice, but you and I know the street only cares about one thing.
ARR, annual recurring revenue. And the revenue number was staggering. Agentforce is already generating $540 million in ARR.
And the growth rate on that?
330%, year over year. For a company whose core business is growing at 9%, having a new product line growing at 330% just fundamentally changes the entire story.
And Agentforce is tied to their data cloud, right? It's not a standalone thing.
That's right.
But
And when you combine the two, Agentforce plus Data Cloud, their total AI products are at $1.4 billion in AR.
1.4 billion.
Growing at 114% year over year. That is the hard data. That's the proof that ValueAct isn't investing in a legacy SaaS company anymore. They're investing in an accelerating AI platform.
And you could hear it in Benioff's voice on the earnings call. He called Agentforce the fastest growing product I have ever seen in the history of Salesforce.
You just don't hear a founder of a company that big say something like that. He's framing this as a new era, the third wave of AI. They're selling productivity and cost savings to big companies that are drowning in labor costs.
And the monetization model is the key to making this whole thing work, right? It's not just selling another license.
No, it's a consumption-based model. The sources point to something like $2 per conversation, or a similar metric based on usage. This is so critical because it creates this massive expansion revenue opportunity.
So the more a customer uses the AI agents, the more they find value in them, the more money Salesforce makes.
Exactly. The revenue isn't capped by seat count, it's capped by utility. So as that $540 million ARR base gets more useful, it just compounds on itself. It's a pure play on productivity.
Okay, so the AI story is fantastic, but the overall financial health of the company has to be strong enough to support this. Was the rest of the Q3 report solid?
Incredibly solid. And this is the part that validates ValueAct's whole efficiency thesis. Total revenue hit $10.3 billion. That's up 9% year over year. So the core is stable, even if it's maturing.
But the margins, that's where the activist pressure really shows.
That's where it shines. Adjusted EPS came in at $3.25. The street was expecting $2.86. That's a huge 14% beat.
And the operating margin.
This is the number Morfit lives for. Non-GAAP operating margins hit 35.5%, up 190 basis points year over year.
So they're delivering insane AI growth and expanding margins at the same time.
That's the holy grail.
Yeah.
It proves the thesis is working. And their future visibility, the RPO, was also strong.
RPO, remaining performance obligations, the backlog of future revenue.
It hit $29.4 billion, beating forecasts. So customers are signing big long-term deals. And on the back of all this, management raised their guidance for the full year and set this incredibly ambitious target.
The $60 billion target.
$60 billion plus in organic revenue by fiscal year 30. And Morfit is betting that the only way they get there is on the back of Agentforce's 330% growth.
So the quarter delivered the proof. And Morfit's buy was timed perfectly to capture the market's failure to recognize it.
Right, so if the numbers were so good, if AI growth is at 330%, why is Morfit getting to buy the stock at a 24% discount to where he sold it just a year ago?
That is the big question. And this is the market anomaly. The price disconnect that creates these incredible opportunities.
It's just baffling to watch sometimes. The stock is down somewhere between 22 and 26% year to date. It's the second worst performer in the entire Dow Jones Industrial Average.
Behind United Health. I mean, the market has been treating Salesforce like it's a dying legacy tech company.
And at that 260 price that Morfit paid, the shares were bumping along the bottom third of their 52-week range, and way, way below that 365 high where ValueAct was taking profits.
The market narrative has just been stuck. All year, investors have been obsessed with that slowing 9% core growth, and they've completely missed the AI story brewing underneath.
And you see it reflected perfectly in the valuation multiples. It's a profound mispricing.
Look at the forward PE ratio. It's trading at, what, 19 to 20 times earnings?
Maybe 20. Historically, when CRM was the high-growth darling, it traded at 40 or 50 times forward earnings. The price-to-sales ratio is 5.6. It used to be between 6 and 10.
It's a massive discount. So the stock is priced for that 9% legacy growth, not the 330% AI acceleration.
Which means Morfit's thesis is just pure multiple expansion.
He's betting that eventually the market has to wake up. As Agentforce becomes a bigger and bigger piece of the revenue pie, you can't justify a 19 PE.
Exactly. The market will be forced to re-rate the stock. And that gap from a 19 multiple to maybe a 40 multiple, that is the asymmetric opportunity he's buying.
So what does the rest of Wall Street think? Do the other analysts see this?
The consensus is, let's say, cautiously optimistic. It's a moderate buy rating. You've got about 28 to 30 buy ratings and only one outright sell.
And the average price target.
It's floating between 323 and 327. So even just to get to the average analyst target, you're looking at a 25 or 26% upside from where Morfit just bought in.
But the individual analyst reports after earnings were all over the place. That highlights the debate.
A huge divergence. You had Citizens Capital sticking with its super bullish 430 target. Deutsche Bank raised theirs to 360. But at the same time, Citi trimmed their target down to 253, citing the slowing core.
That split perfectly frames the bull versus the bear case. Let's really spell out ValueAct's bull case.
The bull case, the $25 million bet, is all about AI monetization and penetration. Salesforce has 150,000 enterprise customers.
A huge base.
And right now, Agentforce has only penetrated about 8% of that base. With that consumption pricing model, if they can move that from 8% to, say, 25 or 30%, the revenue explosion is almost hard to comprehend.
But you have to respect the bear case. It's what's kept the stock down all year. What is it?
The bear case has two pillars. First, that huge core business really is slowing down to high single digits. And bears argue that it's so big, the AI growth will take too long to really move the needle on the total number.
And the second pillar?
Competition. It is getting brutal. You have Microsoft embedding Copilot into everything. And then, maybe even more dangerous, you have ServiceNow coming directly for their core CRM business.
So the skeptical question for Morfit is, can they really fend off these giants, maintain those beautiful 35% margins, and hit that $60 billion target?
It's the classic platform leader defending its turf story. And Morfit is staking a whole lot of money that Salesforce's customer lock-in, combined with Benioff's focus, now sharpened by ValueAct, will let them win.
This trade isn't just a stock buy. It's a bet on a huge strategic pivot. And to really get the depth of his conviction, you have to look at the playbook he ran at Microsoft.
The Microsoft parallel is everything. It's the most important context for this entire trade. ValueAct was involved with Microsoft from 2013 to 2017 with Morfit on the board.
Right when Satya Nadella was executing that historic pivot from Windows licenses to Azure and the cloud.
And ValueAct wasn't just a cheerleader. They were instrumental. They pushed Microsoft's board to set specific, measurable cloud revenue targets.
And crucially, they tied executive pay directly to hitting those targets.
Exactly. They aligned everyone's incentives with the painful but necessary long-term shift. It's what we used to dream about doing in our old M&A days.
Oh, for sure. Forcing that kind of discipline is an art form. And the outcome at Microsoft speaks for itself.
It's legendary. That transition took Microsoft from a $250 billion company to well over $1.8 trillion.
And ValueAct sees the exact same pattern here. They see CRM's AI shift as a mirror image of Microsoft's cloud shift.
It requires tough decisions like that massive $8 billion acquisition of Informatica for data management. It requires tying pay to new metrics like Agentforce ARR, and Morfit is on the board to make sure it happens.
And their track record on these tech campaigns is it's exceptional. They've averaged almost 46% returns. The S&P in that same period, under 19%.
Right. And you just mentioned the Informatica deal. We should spend a second on that because that $8 billion is directly tied to the Agentforce thesis.
It's a huge number. Why was that so important?
Because AI agents are only as good as the data they eat. If a company's customer data is a fragmented mess, which it usually is, the AI will hallucinate. It will give you garbage.
Garbage in, garbage out.
Always.
Yeah.
The $8 billion Informatica deal is a massive investment in data plumbing. It's about ensuring Salesforce can deliver clean, unified, reliable data to Agentforce, which minimizes those hallucinations and makes the agents actually useful. They're buying the fuel for the AI engine.
So it's a strategic necessity, not just a nice to have. Okay, let's pivot to the threats, because the bear case is real. Who are the rivals keeping them up at night?
The competition is fierce, and the number one threat, based on the numbers, is ServiceNow. They are moving way beyond their IT service roots.
They launched their own CRM platform last year.
In May 2025. And they're already reporting $1.4 billion in annual contract value on that platform, and it's growing at 30%. That is a direct, sophisticated shot across the bow.
And then you have the giant lurking in every enterprise, Microsoft.
You can never ignore Microsoft. They're weaving Copilot into Dynamics 365, using the power of Office and Teams to make their offerings super sticky.
Plus, you have Oracle out there talking about embedded AI with no extra licensing fees, which directly challenges Salesforce's whole consumption model.
It is an all-out war. But Salesforce is fighting back. They're launching their own IT service product to go after ServiceNow, and they did the Informatica deal to strengthen their data moat.
So what's the broader investor sentiment around this? We know what Morfit thinks, but what about the rest of the institutional money?
The flow is mixed, which reflects the debate, but it's generally constructive. You have the huge core holders like Vanguard with $24 billion in the stock staying put.
And some growth funds are buying in.
They are. Temasek, the Singapore Sovereign Wealth Fund, took a new stake. Harris Associates increased their position by over 800% to more than $700 million. They're buying the AI story.
But there is rotation, right? Not everyone is convinced.
For sure. Capital Research Global sold a huge chunk, a 45% reduction. JP Morgan trimmed their stake. So you're seeing growth investors buying the dip, while some of the value or passive funds are rotating out because of the slowing core.
And what about the retail crowd? Did this trade get any buzz?
Oh, a ton. CRM was a top 5 buzzing stock online after earnings. Jim Cramer called Agentforce the holy grail for customer service, which, always gets people talking.
The debate on social media is basically a perfect mirror of the debate among analysts. Is it an underpriced AI rocket ship or a dying SaaS company?
And Morfit just put $25 million on the table saying it's the rocket ship.
Yeah.
So we need to watch the calendar for the next data points.
What are the key dates to watch?
Well, besides the ex-dividend date on December 18th, the big one is the Q4 earnings report in early March 2026.
That's when we'll get the next update on Agentforce.
Everyone will be laser-focused. Customer wins, ARR growth, and most importantly, the new guidance for fiscal year 27.
Morfit has made his bet that the momentum will accelerate. That's the report where we see if his timing was as perfect this time as it was back in 2024.
It's all on the line.
This has been a fascinating look at how conviction capital really works. So let's just reiterate the core thesis for everyone. Morfit's $25 million buy is a signal. It says the AI transformation at Salesforce is no longer a theory, it's real.
It has successfully gone from being a promise to being a product that generates sustained, explosive commercial revenue.
And the trade itself is fundamentally a bet on multiple expansion. He sees a stock trading at a historically cheap 19 times earnings.
And he's confident that as that Agentforce revenue, growing at 330%, becomes the bigger piece of the business, the market will have no choice but to re-rate the stock back towards its historical 40 or 50 times multiple.
So that 25% upside just to reach the analyst targets, he sees that as just the start of a much bigger opportunity. He bought the moment the hard data proved the story. And he took advantage of the market's irrational panic that kept the stock down all year. It's a textbook move.
A beautiful, disciplined, tactical reentry. You love to see it.
And here's the final provocative thought for you to chew on. ValueAct is known for averaging into their positions. They build them over time, in tranches, as their thesis gets proven out.
Right. This isn't usually a one-and-done shot.
Exactly. So given that they kept a huge, nearly 3 million share core position even after their big sale, and now they just added another $25 million, the question you should be asking yourself is not if the AI shift is working. Morfit's money just confirmed that it is.
The question is,
The question is, how much more capital is ValueAct going to deploy into Salesforce if those Q4 results in March confirm that Agentforce is still on that exponential 330% growth trend?
if those numbers come in hot, this $25 million buy is just the appetizer. Almost certainly just the opening shot in a much larger campaign. We will be tracking every single filing. Thanks for getting into the weeds with us.